Saturday, June 8th, 2019, Monaco 64, home of alternative economics and contrarian views. Today I want to look at the proportions in nature, the golden mean, or phi, or the divine proportion as it's called, or the golden ratio, and how it relates to technical analysis. So, some people think it's not a credible thing to look at, but I'll look into the the golden mean, the proportions that happen in nature and in the human body, and also in other animals and plants. And it's very interesting. And right now in the gold market, I'm looking at levels which correspond very, very closely to these proportions. I like to also talk about an article I saw yesterday by someone called Sven Henrik from northmantrader.com, and it's entitled Game Over. And it's pretty much what I've been saying, but I think it's good to look at other sources and refer to them. What he says is exactly my feelings towards what's going on now in the markets and with monetary policy. So before I go into the golden ratio, the gold chart, I'll look at this article, and I took it from Zero Hedge. It came out actually yesterday, and it's entitled Game Over by Sven Henrik. So this is what he says. Game over. The grand central bank experiment of the last 10 years has ended in utter and complete failure. The games of cheap money and constant intervention that have brought you record global debt to the tune of $250 trillion and record wealth inequality are about to embark on a new round of peddling blue meth again. I agree with him. These central bankers, they're going to try the same thing they tried that failed. Australia has already cut. So has India. The ECB is talking about it. Markets are already pricing in multiple Fed cuts. The new global rate cutting cycle begins anew before the last one ever ended. Brace yourselves, as no one, absolutely no one, can know how this will turn out. And I agree with him. But one thing I think that is for sure about precious metals is that they have been a constant for thousands of years, a constant measure of true value or true wealth, in my opinion. And that's something that's going to show itself even more now. And that's why I think gold and silver are starting to move, especially gold, even though silver yesterday made a move as well. They're becoming monetary commodities now as we move into this next phase. And why is that? Why didn't that happen in the first phase? Well, because I think a lot of people, investors, speculators, economists, they were giving central bankers the benefit of the doubt that this experiment would work out. But I think people are going to soon realize that it's not going to work out, and it's not going to solve things by trying to do it again, as Sven Henrik says here. So let's see. Absolutely staggering, he says. We are witnessing a historic unraveling here. Everything every central banker has uttered last year was completely wrong. Well, I agree with him. To me, everything they've uttered in the last, 20 years since I've been, looking at, the nature of money, the history of money, the monetary system, gold, fiat money. To me, they've been lying, and they've been, for 20 years, not just 1 year. Every projection they made over the last 10 years has been wrong. No wonder Jay Powell wants to toss the dot plot. It's a public record of failure. And that's why also, for me, it's very hard to listen to these guys. That's why I never turn on CNBC. Sometimes I will listen to a press conference by the chairman of the Fed, but it's really hard for me because I know it's all complete and utter fabrication and baloney. I won't use a stronger word, of course. Why place confidence in people? This is Sven, back to Sven. Why place confidence in people who are staring at the ruins of the policies they unleashed on the world and are about to unleash again? All the distortions of 10 years of cheap money, debt, wealth inequality, zombie companies, negative debt, TINA, you name it, will all be further exacerbated by hapless and scared central bankers whose only solution to failure is to embark on the same cheap money train again, all under the banner to extend the business cycle at all costs. Maybe, Mr. Henrik, maybe this is not, that they're scared or they're incompetent. Maybe this is done by design. This is maybe the way they suck the wealth out of the middle class and the general public. It doesn't really matter. We just need to know that that's what they're doing and how to protect ourselves. Never asking whether they should nor considering the consequences. But since they are not elected by the people and face zero consequences for failure, they don't have to consider the collateral damage they inflict. So he goes on to say here, I repeat, structural bears, I guess that's people like me, who have predicted that central bankers would never be able to normalize the construct they created and has produced the world's greatest debt explosion ever, were 100% correct. Thank you, Mr. Henrik. We're all staring at a colossal policy failure with no accountability. So he goes on to show some charts here in the article, but I'll go to the end here of the article. He says, while markets will negotiate the ultimate outcome, the verdict on the policy front is already in. Game over. That's right. Central bankers are cornered, and I've said that many times. The grand central bank experiment has been revealed to be a colossal failure. Brace yourselves. He's quite bearish as well about the market. So I'll put a link to this video in the description below so you can have a read at the whole thing and look at the charts. But I thought that was really interesting and encapsulated my feelings. So that's why I felt inclined to share this with you. So now the Fibonacci sequence, the golden ratio, phi, whatever you want to call it. First of all, let's look at who Fibonacci was. Fibonacci, 1170 to 1250, was an Italian mathematician from the Republic of Pisa, considered to be the most talented Western mathematician of the Middle Ages. The name is commonly called Fibonacci. Was made up in 1838 by the Franco-Italian historian Guillaume Libri, and is short for Filius Bonacci, son of Bonacci. So basically, Fibonacci, he created this Fibonacci sequence. So this is the Fibonacci sequence here. Is a series of numbers from 0, 1, 1, 2, 3, 5, 8, 13, 21, 14. So the next number is always found by adding up the two numbers before it. The 2 is found by adding the two numbers before it, 1 and 1. The 3 is found by adding the two numbers before it, 1 and 2, and so on. And here's the list of the Fibonacci sequence, from 0 all the way to 31,788. As this article here on mathisfun.com says, it makes this sequence makes a spiral. When we make squares with those widths, we get a nice spiral. So you can see here the Fibonacci sequence, you get the spirals. So the other thing is the golden mean, or phi, or the divine proportion. So this works when you take any number in the Fibonacci sequence next to each other and divide them by each other. So if you take 89 divided by 55, you get 1.618. So that's the golden ratio. Or if you take 55 divided by 89, you get 0.618. And the reciprocal, of course, would be 38.2. And the higher the numbers get, the closer it gets to this 1.618. So that's the golden ratio. So why is this ratio so important? Well, looking here at this article on this website here, Gizmodo, 15 uncanny examples of the golden ratio in nature. So I'll read briefly here. It says, the famous Fibonacci sequence has captivated mathematicians, artists, designers, and scientists for centuries. Also known as the golden ratio, its ubiquity and astounding functionality in nature suggests its importance as a fundamental characteristic of the universe. So you might be asking yourself, you know, you worked in the financial markets, you studied economics, international relations. Why did you learn this? Well, when I started working in the markets, you learn from the more senior, colleagues. Some of them don't look at technical analysis. Some of them only look at fundamentals, the economic news, what's going on around the world. Some look at both. And, people are always, senior people always take the younger brokers or traders or under their wings. And they if you ask them, they're nice to you most of the time, and they'll teach you this stuff, and then you can go on and buy books, and that's how I learned about this in the markets through technical analysis. People used to say, "Oh, this is a retracement level, the Fibonacci retracement," and I went, "Who is Fibonacci? And why?" So that's how I learned about this, and you can learn about this too, of course. In nature, flower petals. The number of petals in a flower consistently follows the Fibonacci sequence. Famous examples include the lily, which has 3 petals, buttercups, which have 5, the chicories 21, the daisies 34, and so on. Phi appears in petals on account of ideal packing arrangement as selected by Darwinian processes. Each petal is placed at 0.618034 per turn, allowing for the best possible exposure to sunlight. Seed heads. The head of a flower is also subject to Fibonacci process. Typically, seeds are produced at the center, then migrate towards outside to fill all the space. Sunflowers provide a great example of these spiraling patterns. Pine cones. I'll put the link to this article as well below. The interesting one here, tree branches. The Fibonacci sequence can also be seen in the way tree branches form or split. A main trunk will grow until it produces a branch, which creates 2 growth points. Then one of the new stems branches into 2, while the other one lies dormant. The pattern of branching is repeated for each new stem. A good example is the sneezewort. Root systems and even algae exhibit this pattern. Shells. So you get the idea. So what about the golden ratio also in the human body? Well, here you go. The ear has Fibonacci sequence formed in the ear. Helps hearing better. The face is also based on the golden ratio. From the top of the head to the bottom of the chin, it should be 16.8 inches on average. This is a phi proportion. People with longer heads tend to have breathing problems, and people with shorter heads tend to have jaw problems and headaches. There are 5 openings on the face. This is a Fibonacci number, right? So the golden ratio is a number that is often seen in simple shapes and figures, it says here. So what else? Hands. There we got 2 hands, 5 digits, 8 fingers that are composed of 3 sections, and the feet has 5 toes. So these are all Fibonacci numbers. That's what they're talking about. Also the arms, the ratio of your forearm to your hand is 1.618, or the golden ratio. Body temperature, if you take 0.618, the phi proportion of 37 degrees centigrade, which is average human body temperature, you get 23 degrees or 73 Fahrenheit, which is perfect room temperature. I think I've gone through this enough. So what I'm trying to get at, even in markets, I would say that's why people look at the technical analysis. That's why they look at the golden ratio or the 61% retracement Fibonacci. The other important one is the 38.2, which is the reciprocal, or even the 50%, which is, also is 5, or, is a Fibonacci number. So I've been looking at this for a few years, because this has been a long-term correction we've had for the last few years. And I just wanted to show you here. First of all, one of the levels that I've had as support in gold recently has been around 1280 or 1282 or thereabouts. And why? Why do I have that level? Well, it's because I've used the Fibonacci retracement analysis of the secular bull market we've had in gold since the end of the 20th century. Some people have the bottom in 2000, but here in this chart, the bottom was in 1999 at around 252. So if you take that move all the way to 2011 at 1920, the 38.2 retracement is 1282. And you can see there in the last few months, I have been talking about this 1280 level. And we did trade below it, but it never closed below it here on a monthly basis. So that's why this level, in my opinion, was important, this 1280. We have traded above it since, the market has come off in 2011. But the other thing about the retracements that the technical analysts look at, it's found that a lot of times when there is a correction, the market will stay between the 50% retracement, which is 1086. And I know 1086 was not the exact low in 2015, it was 1046. But you can see a few months before that, we touched that support there. We did trade below it, but it didn't stay there too long. So yeah, so this rule of thumb is that we see, a lot of trading around the 50% and the 38.2%. And that's what we've seen since around 2014. Of course, now we're starting to pick up. We've had a very good 2 months for gold, especially, in the last few weeks. Now I'm going to show you another gold chart. This is a monthly one, but only going back about 10 years. And in this one, I've done a retracement analysis from the top to the bottom in 2015, December 2015. You can see there the top around 1920, the bottom around 1045. So you can see here, 38.2% from the bottom is around 1380. So again, the golden mean, or the phi, or the divine proportion is working here. We've had a correction here, as you can see, from 1920 to 1045, and we've retraced 38.2%. Basically, that retracement is around 1380. We had the high in 2016. That was 1375. Also last year, we got up to near that level, as you can see in the chart. And that's been a very strong resistance. And that's the reciprocal of that golden mean, 61.8. So that's why this level, not only because it was the high in July of 2016, but in my opinion, it's because it's such an important retracement level. It's the golden mean. I've done a little bit of analysis from the bottom last year at it was 1160 to the high earlier this year of around 1346. We've had a consolidation since then, and now from my measurements, we've had a breakout from that falling wedge that I've talked about. And my target for that move is around 1475, 1480, which is very near to that 1483 50% retracement. So it's interesting, like they coincide, these numbers. And then of course, you know, if we eventually the 61.8% retracement, that would be very strong resistance there. It would be 1586 or 1600. But there you go. That's why this number is going to be quite key, in my opinion, 1375 to 1380. On the way there, we still need to break 1350. We almost touched that in the spot price yesterday. The high was 1348. You know, some people say will say, oh, you can't look at this anymore because the markets are manipulated. I don't think so. You can still look at it. Even when humans manipulate markets, we are part of nature. And I think it's all intertwined, and it all works out quite amazingly, in my opinion. So that I thought it'd be interesting to show you this. And I recommend you do a little bit of research about the Fibonacci sequence, the golden mean, all the divine proportion. It's a really interesting subject, and it can be applied to anything, not only markets. It's been applied to architecture as well, to art. I mean, I think Leonardo da Vinci, for his Last Supper, a lot of the proportions were based on phi, or the golden ratio. It's supposed to be you know, a very good balance, a natural balance of things, and that's why it's called the golden ratio. This video has gone on for a while. It's just that on the weekend, most people have more time to watch the videos, and I will probably not be making another video tomorrow. I might make a live stream tomorrow night. I'm not sure. If you enjoyed the video, make sure you give me a thumbs up, share it far and wide, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great weekend. Take care. Bye.